So on knowing when to sell, so Druckenmiller, how do you know what do you look for when you're trying to sell a stock, or to know when to sell a stock? The takeaway of this blurb: if the reason you bought a security changes, then you should sell. Conversely, just because a stock falls X%, it doesn't mean you have to sell if the thesis remains. Druckenmiller never, with stars around it, never uses a stop loss. The other thing to me that makes a good investor is you have to know how and when to take a loss. I've been in business since 1976 as a money manager. I've never used a stop loss, not once. It's the dumbest concept I've ever heard. If a stock goes down 15%, I'm automatically out. But I've also never hung on to a security if the reason I bought it has changed. That's when you need to sell. If I buy X security for A, B, C, and D reasons, and those securities are no longer valid, I sell. Whether I have a loss or a gain, that stock doesn't know whether you have a loss or a gain. You know, it is not important. Your ego is not what this is about. What this is about is you're making money. So if I have a thesis and it doesn't bear out, which happens often with me, I'm often wrong, just get out of there and move on. Because I said earlier, if you're using the most disciplined approach, you can find something else. There's no reason to hang on to any security where you don't have great conviction. Super good stuff to think about. One of the, actually 2 points that come up a lot in the discussion, the comments section. One, people saying, for example, like right now, Tesla is 600 bucks. Oh my gosh, I sold out of that stock when it was 150 bucks. I'm such a moron. I now hate that stock, and it's in a certain category of my mind because I missed it, and I kind of have like a jealous hatred thing for it now, so I will never buy into it again. And I've totally done that too. Not with Tesla, but with other stocks, where I'm kind of like, dude, not only shouldn't I have sold it, you know, I always talk about dollar costing out of a stock. That's one of the reasons I do that now, is because when I'm fully out of a stock, in my mind, I'm like, that is old news. That's Super Nintendo. That's N64, and it's no longer relevant. My brain just tends to do that. But I get out of the habit of constantly reevaluating it. So that's one of the problems that comes up in the comments section. I've shared in my own videos too. But another one is the idea of a stop loss. Like when you're seeing a lot of red, it's easy, especially if you're sitting there looking at your phone and it's like minus 2%, minus 3%, minus 4%, minus 5%, 6, 10, 12, 15. It's like really freaking tempting to just be like, oh my gosh, sell. Like I'd rather just lose 15% than, you know, whatever. Or to just set stop losses as well. I was fascinated to hear him saying stop loss is the dumbest concept I've ever heard of. Because I've used stop losses before and I feel stupid now. What do you guys think about that? I'd be interested to hear your thoughts about stop losses and also those two other phenomena I just mentioned. Let me know in the comments section. On managing emotions while investing, Druckenmiller, how do you manage your emotions while investing? Fighting emotions is a lifelong battle in investing. Doesn't matter how long you've been in the game. This is another point that he made that surprised me because I feel like I'm getting better at dealing with my emotions. But the more I learn about myself and the more I learn about the world, the more I also learn how much I don't know. And that includes how much I don't actually realize that my emotions aren't in more control than I thought they were. So Druckenmiller goes on and says, you just have to be disciplined and you're constantly fighting on emotions. Look, I'm not going to lie to you. My first boss had the saying, the higher they go, the cheaper they look. Amen, brother. I totally know what he means. There's something weird, and I know everybody watching this has this experience. It doesn't make any sense, but when a security goes up, every bone in your body wants to buy more of it. And when it goes down, you're fighting and making yourself not sell it. It's just the nature of the beast. And you have to constantly remind yourself why you own that security. And just because it's going down doesn't necessarily mean you should sell it. If it's going down, it definitely means you should reevaluate your thesis, but it doesn't mean you should sell it. And you cannot get crazy when it's going up. How do you guys feel about that? What do you guys think about that? Definitely totally hits home for me too. I think that's literally the struggle like every day. On the biggest investing mistake he's made, Druckenmiller lost $3 billion by buying in at the top of the .com bubble. Even with 20 plus years of investing experience at that point, he couldn't stomach watching others make money while he was on the sidelines. And this one's interesting because he does the whole double dip thing. The This was one of my biggest investing mistakes. Somebody asked me what I learned from this, and I said, nothing. I already knew it. I didn't learn it. I already knew it. In January of 2000, after riding that tech boom to a T and making billions of dollars in 1999, I sold everything. So the bubble hadn't burst yet. He timed it well and he got out. He sold everything. I had a couple of internal portfolio managers at Soros who didn't sell out. They had smaller portfolios, but made 30% after I sold. So he had already sold out and it kept going up. And now he starts to think, oh my gosh, I got out too early and I'm a moron. I'm missing out. This is the easiest money ever. So he's saying, I just couldn't stand it anymore. I'm watching them make all this money every day for 2 days. I'm ready to pick up the phone and buy this stuff back. I pick up the phone and I buy them. I might have missed the top of the .com bubble by an hour, dude. You know that joke on Reddit where people are like, hey guys, good news. I sold Palantir, so now it's going to start going up. Like, that's actually what happened in this case. This guy plows all of his resources and his fund back in, and the .com bubble burst an hour later, dude. How friggin' brutal is that? I ended up losing $3 billion on that trade alone. I had made more of the year before, but you know, $3 billion is a lot of money. It was all because I got emotional and dropped every tool of discipline I've ever had. And everybody says, and somebody says, what did you learn from the trade? And I just said, I learned nothing. I already learned that lesson 25 years ago. So you can talk about not being emotional, but it takes incredible discipline. And again, I super duper agree on that. Do you guys, I want to hear your guys' stories about stuff like that. It's totally happened to me before, dude. Yeah, everybody in the comment section is just like, agreed. Emotions wreck me. Share a story in the comment section if you guys are open enough to do so. I will think of one at some point and share it with you if I haven't already on the channel. But going back to Druckenmiller, on figuring out what actually makes a stock go up and down. So they're asking Druckenmiller, this ultra hyper successful stock investor and hedge fund manager, how do you figure it out? So he says, a lot of people can do fundamental analysis, but finding out what actually makes a stock move requires more digging. So, you know, on YouTube and stuff, we do chart analysis and we look at the reports and we look at the news and we talk about the trends and all this stuff. And he's saying, yeah, a lot of those things matter, but in some cases, those are just kind of like static, but other weird ass, like other super fruity factors will make it actually go up and down. And I think that's kind of one of the phenomena we're seeing with GameStop and AMC connected to Reddit, you know. So going back to his advice for us, varies from stock to stock. Toggle, that research tool, actually helps me find things that I didn't even know move the stock. But if it happens over and over again, you figure it's not random. Back when I was an analyst in Pittsburgh, my boss asked me to analyze retail, and I'd come in with my earnings estimate on Kmart. He asked, yeah, but what makes a stock go up and down? I said, what do you mean? He says, everybody knows what you just told me. Keep looking. So he's like, dude, anybody can look at the financial reports. Anybody can, you know, put together a DCF. Keep looking. Finally, I came back with new analysis. This may have changed, but if you graph the change in food and energy prices over top the retail index, it's like clockwork. Food and energy prices go up, retail stocks go down. It's not rocket science here. If you take discretionary spending and you increase the cost of it, there's less money to spend. I watched that and it worked for 10 to 12 years, and then for some reason it stopped working. I completely endorse analysis of fundamentals. Looking at the balance sheet, trying to figure out a couple years from now what people are going to think about this company, or are the earnings going to be different. But then there's all this weird stuff. Like I mentioned, the beauty of Toggle is it comes up with stuff that sometimes I don't quite even understand. But frankly, I don't care if the stuff works. I'm going to go with it. I'm very open-minded. I don't need to totally understand something if I've seen it work over and over again. Most of these things I understand. I might get a notice one day from Toggle that XYZ looks good. Then I can do my fundamentals. Then I can look at the chart. It's not only a discipline in terms of buying and selling, it can also be an idea generator. So that's super fascinating. Be interested to hear if you guys have ever had an experience like that where you're like, yeah, that stock's really hot right now, or vice versa. Yeah, that stock's really cold right now, but because of some weird factor or weird phenomena happening in other places in the market, it's probably going to benefit this stock and or this whole sector. I've had stuff like that happen. And snooping that stuff out and figuring it out and being able to present it to you guys, in a timely manner that actually brings value is like the hardest thing ever. But what do you guys think?